Okay, another update on Bitcoin dollar. We right now it is Monday night, just a few minutes before 9 p.m. Eastern time, and it is February 5th. So the discussion again, and I receive a lot of emails, but I'm generally going to do these updates. Like if you're not in the chat room, I'll try to send out these updates at least 2 times a day if I can. Obviously, when there's something that's moving, it's been this busy with this particular market, cryptocurrencies, things like that, Bitcoin dollar. We're going to just stick with the Bitcoin dollar right now in this video, but I think that a lot of people are selling Bitcoin and cryptocurrency programs. And over the last few weeks, I think a lot of those individuals, I can't say all of them, of course, but a lot of them have thought that this range right here where I'm moving my cursor was sort of the bottom and that it was going to bounce and find some support and maybe go back up. And people were looking really hopeful, especially the people, as I said before, we talk about this a lot, that all through November and December there were people that bought Bitcoin dollar. There was just so much hype and so much talk and so much excitement. And people, it's just so strange. I was watching just videos on Facebook, people that sell internet services. They're selling other products and things like that, and they happen to have purchased some Bitcoin dollar, and they were just so excited that they had to talk about it while they're making a pitch or a presentation on an entirely different subject. And they're sharing how they've doubled or tripled their money with Bitcoin dollar. And they're just really excited. But those people end up holding on to too long, I guess I should say. They don't know where to take those profits. We do. We're traders. We're going to trade. We understand the difference between investing and buying and holding. That's great. There's nothing wrong with that. And then there's also the difference, which is the other side of that, which is day trading. It's trying to get into a trade, make profits, sometimes in the same day. Sometimes it might take a few days for price to hit the targets, especially depending on the time frames and the setup that you're using. So yesterday, and I believe with the weekend update, we were talking about it didn't look like it was really going to push. I wasn't too sure if it was going to continue the trend quickly. However, there have been some developments over the last 12 to 24 hours that have caused this situation to accelerate, where we see the trend continuing. Now, where is it going to stop? Everybody's saying, where's it going to stop? When do you think it's going to bounce? And again, using all of the technical analysis skills that I teach, and I can only teach you what I know and what works for me, what I've used since 2001. It's the same way, the strategy, the continuation breakout trade is what really puts me into these trades anyway, especially in a trending move. But as I've been saying for the last couple of weeks, 51 or 5200, right around there, is my estimated target. Now again, please keep in mind, when I pick these numbers, these are based on Fibonacci extension targets. These are not always going to be precise on the number targets. I am not saying to sell Bitcoin dollar and hold on to 5100 or 5200. And this price tag right here, it's not even at the exact location anyway. I couldn't even get it to line up right there at that extension target. They're going to be pockets or ranges of support or resistance that are going to create this opportunity. It's sort of a magnet at this point where people are going to sell this off to. Now, again, that being said, it's like last week when it started to drop through the 9,000 level. I believe we got into the trade initially at 9,700. And then I had said 77 or 75 or 7,800 would be the range where it would find some support, and people were saying that at about 8,900 or 8,100 that it was going to bounce. And I was not prepared to tell anybody to buy Bitcoin dollar. However, a lot of these people that I was talking about earlier, who seem to have a very limited amount of experience with trading and trading something like this type of environment. This is a psychological approach to understanding the price movement, as well as the technicals and as well as the fundamentals. There's always a psychology behind trading, What is driving people to either buy or sell, or to hold on too long, or to, pile in when price is rallying, either direction? It really doesn't matter. So all of these people, as I keep saying, a lot of them are really having a hard time letting go of the idea that price isn't going to take out the 20,000 level anytime soon. They want that to happen because they purchased when price was going through, back in November and December, a lot of it. You can see the accelerated move in these daily candles anyway, and the distance that it's covering, as opposed to these daily candles before it really accelerated, with a lot of the euphoria and hype and talk and the coverage that it gets in the media. You can see the behavior. Again, you can see the psychological behavior and the way people are reacting to all of that. But again, it's hard for people to let go when they're hoping that it's going to come back. Now, at that point, when it hit 77, I believe that low on last week went about, it was like 7,600. And then we had the weekend. And the weekend, I wasn't too convinced, and I already talked about this on the weekend update, why I didn't think it was going to take off back up just yet. But I wasn't too sure how fast the downtrend, if it was going to resume, how fast or how far, the distance it was going to cover. If it was going to cover a greater distance. Because my expectation at the time last week was, in order for price to come back down here to the 5,200 area, it could be some time. I mean, it could be a week or 2 or 3, maybe even a month. But at the same time, and I keep going back to this one, you've got to know what you're trading. You've got to know its behavior and its characteristics. I refer to, and I'm not saying that it's going to move the same distance in the same way, but there are some similar qualities. We refer to the pound yen as the beast. Me and my subscribers, we've been calling it that in the chat room since 2007. And it's because of the distance that it can cover. And this one is like a beast. When it really picks up that momentum and people pile in, and the euphoria and the global impact that it has from all of these traders around the world, we can see some pretty strong moves. So it's not out of the question that this could come back down to the 5,200 relatively soon, like maybe in a week or even less. It is a possibility. I'm not saying that it's going down there. We don't trade that way. We trade bits and pieces of it until we get more information. We need more confirmation. As I've been saying in all of these videos, I'm all about confirmation. I need more confirmation. When I see price approach these price targets, like we were calling the 78, between the 7,800 and the 7,500 level, once it hit that level, then we've got to wait and see what's going to happen next. We can lock in some profits. You can peel off a portion of that trade that you have open. If you can't, maybe you lock in profits at that point from the entry of 97, and then you get back into the trade again later, or you wait for more confirmation. Either way. So again, as this one started to pick up, we got back into the trade, or we were able to call another opportunity for those who weren't in this trade from the initial breakdown here last week, or even where it capped out and it started to move back down here and went up to almost the 786 Fibonacci retracement level. So where do I think it's going now? What do I think is going to happen? So in order to find these, and I mentioned this all through the weekend update video, there are other levels that we would take profits at even before it hits 5,200. Because again, it may not hit 5,200 on the number. It might bounce before it hits 5,200. It might bounce at 5,500. And again, if you hold on to those levels, or hold on to it because I mentioned 52, you're giving up a lot of profits. You're going to let a winning trade turn into a losing trade. Don't do that. You have to have other areas to scale out of your trade, other areas, other targets. So I'll give you an example. And this is something that I went through when I first started trading. The first year or two of my trading, I struggled. I would find one target and I would get into a trade and I would hold on to it. And then some of you may know my story. I hired a professional trader psychologist, and they worked with traders exclusively. That's what they did. And one of the things, and they don't, they didn't give me a trading system. They got to the root of some of my fears and why I was maybe closing my positions out too soon. They would ask me questions like, did you have price targets? Do you have exact entries and stop loss? And are you changing them throughout the day? Why would you do things like that? It was those general questions that most people go through. And I really didn't have those issues. One of the things that they worked with me to resolve or to implement was having multiple take profit levels. in my trades. So I would find one trade. As I was developing my trading system, I found a target, so a price target, and then I would just hold on to it. And sometimes it wasn't always, because that's the way trading goes. It's not going to be precise. It's never always going to hit the target every single time. I mean, if it was that easy, everybody would be able to do it, right? And we would have little machines that would spit out these trades and we would always be making money. It doesn't work like that. Even professionals are going to struggle at different times because it's not going to reach or fulfill some of those distances. So you've got to protect yourself. At that point, you've got to get in and you've got to say to yourself or analyze the trade and say, is it stalling? Is it possible that it may not hit that projected price target? Should I lock in profits at this point? Should I be looking for additional or multiple take profit levels to scale out of the trade along the way? And that's one of the things that I worked on. And when I did that, it improved and changed my results dramatically. Because very often, and I'll just go back to the continuation breakout trade example, and this is something that you may be able to apply yourself if you're using or building your own trading system. With the continuation breakout trade, let's just say, for example, with the euro dollar, it's a 55 pip take profit level. Sometimes it won't hit the 55 pip take profit level. Now, why would that happen? That could happen because maybe I identified a continuation breakout trade at the end of a trend, and I wasn't aware of it and didn't go back to look to see where those trades all developed. It could be maybe I miscalculated something. So how can you protect yourself if you make some kind of mistake? How can you put some safety measures in place to prevent a winning trade from turning into a losing trade? And that is one of the things that I initiated was, instead of just looking at the trade on the euro dollar when it was a continuation breakout trade for that 55 pip take profit level, which was great, it usually works, and it works almost all of the time when I identify everything correctly. But one of the things I implemented was taking some profits when price reached the first 20 to 25 pips. I usually don't have to do that if I've gone through all the checkpoints and I know without a doubt that I am not making mistakes. But sometimes in the heat of the moment, when things are going on, maybe I have multiple trades, maybe I've got things going on, if it's possible, or if I'm a little confused or I can't really see it and it doesn't make any sense, if there's continuation breakout trades, for example, if there's multiple continuation breakout trades in this uptrend, which there was here. Again, I could show you this chart and tell you it was a 1 hour chart, euro dollar, or Bitcoin. Doesn't really matter. You can see the trend that I'm talking about here. I'm going to go ahead and put the crosshairs here in here. So you can see there's a continuation breakout trade here, another one here, and it just continues. Now, it's possible that I could have identified a continuation breakout trade here, and I would have traded it. Let's say it was euro dollar to the 55 pip take profit level. But what if it stalled? I would have to say to myself, okay, well, did I ask myself, and this is something that I teach in the members area in the trading modules, whenever I see a continuation breakout trade or any other trade for that matter, I always ask myself, was there a previous trade in place according to my system, and is it possible that it's reaching the extension target of these previous trades, and that's why it would stall and not go any farther and then come back down again and maybe stop me out or reverse. And in a situation like that where it's in an uptrend and I'm catching maybe one of the last few continuation breakout trades, then I'm definitely going to scale out at different levels. Same thing here. On the initial continuation breakout trade to the downside, we're okay for the most part. If we're going to use a target of approximately 78 to 7,500, we're going to take that. Again, it dropped down to about 76. We were good. We locked in profits. Now, what if it's going to continue lower, or we're expecting the possibility of a bounce for it to go back the opposite direction? Again, as I said over the weekend update, there's nothing here to indicate to me that this downtrend is over just yet. Nothing here shows me that. That could all change in the next 12 to 24 hours. It really could. It could stall and reverse and go all the way back up to 13,000. That would be great. We'll trade it that way. It doesn't matter to me. But I need more information. So far, according to this initial trade here, it has not hit the 5,200 level. So it's possible that we could hold on to this trade a little bit longer and not necessarily always scale out at these different levels. But it's a good idea, again, to lock in profits. Why? In this situation, like we talked about with this initial setup, this retracement back up here went deeper than the 618. Normally, if it was below the 618, I would hold for this target here. but it went a lot further. The retracement went a lot further. And what does that mean to me? To me, the way I interpret that information is that it's a trend that may not, that it might tire out a lot sooner than I expect it to. And I need to prepare for the possibility of a bounce before it hits these overall targets. I need to prepare for the fact that something could stall here. In other words, that psychology, that market memory, that psychology behind these trades. How long are traders willing to continue to trade something in a certain direction, or hold on to their trades, or hold on to their positions, or all of the people that are negative because they got in here back in November and December hoping and hoping and hoping. How long are they going to hold out? There's a psychology to it, and you can measure in many cases the distance. Again, with this deep of a retracement here, the way that as deep as it went, I would suspect that it may not necessarily hit the 5200. All of that could change as it's approaching maybe 5700 or something like that, and I see some news or see candle patterns that would convince me that price is going to take out that level, then of course I'll continue to trail it down that way. But again, I can't say until we actually see it. So again, we can hold on to these levels, but we have to protect ourselves along the way. Remember, this one might work out perfectly. I even have targets that are down here at 4400 for this one. And a lot of people are having a really hard time accepting that it could drop all the way to 4,400. Even if it drops, even if that's a possibility and it happens, I'm not calling for everyone to pile into Bitcoin dollar and hold for 4,400. I'm not saying that. What I'm saying is I have projected price targets to that level. And if it starts to take out, if price takes out these levels with conviction and I can see the velocity and the participation, then I'm certainly going to continue to hold out for those targets, and those targets will probably become a realization. Even when it, and if it does hit 5,200 or it bounces at 57, or even if it does go all the way down to 4,400 or even lower, it's still very capable of bouncing and going all the way back up and taking out the 20,000 again. I have no idea how soon that'll be until we get confirmation of that possibility. But you get my point. We've got to protect ourselves along the way. So let's take a look at the 4-hour chart. The 4-hour chart, we've got multiple price swings. We've got to find out the most significant A, B, C, D price swings to use the Fibonacci tool. We talked about this last week. I talk about it all the time, year after year. It's just too common for people to grab the Fibonacci tool and start sticking it on some of these price swings and then trying to figure out where these extension targets are. You've got to be using the most significant highs and lows. What would make something significant, a high or a low? Well, you could take the week's high and low. You could take the daily high and low. On and on. You get my point. You see what I'm talking about. It takes a lot of technical understanding and experience to know when to use these tools and these possibilities, and to understand. It's also not just the understanding of the technical tool itself, but it's also just the experience. The experience of actually applying and making mistakes. We talked about that as well. Just with this recent move down to the downside. So recently you should have heard me, or you could have heard me talk about that sometimes, unfortunately, the way to really get a really good solid experience and understanding of using some of these tools is to make some mistakes so that you know where to not use some of these, where not to apply it. You know, when you're using it incorrectly is what I'm getting at. So we have some price targets down here. Another price target is the 58 or 5900 level. Again, going back to the 1-hour time frame, we get more breakdowns, more breakouts, again, more continuation breakouts, I should say. I'm sorry, the precise strategy that I actually use to get into some of these trades. Again, this is the 1-hour time frame. So needless to say, I don't see Bitcoin bouncing anytime soon. But at this point, like I said, I don't see anything here to show me or convince me that this downtrend is over with. Technically, using every rule to technical analysis, you know, this is going to continue, and there's nothing here just yet to show me that it's going to turn around. We've got to wait for that to actually happen.